Share, like, comment, and subscribe.
You're at the register, a line of people behind you, and the machine beeps. Declined. You've hit your credit limit, and bankruptcy suddenly feels like a very real, terrifying possibility. When you turn on the news, you hear politicians and pundits talking about government spending in the exact same way. They warn that the country is maxing out its credit card. But comparing a nation's economy to a household budget hides how global finance actually works. The government does a card in its wallet. To see what's really happening, we need to look at the annual budget. When a government spends more money in a single year than it collects in taxes, the difference is called a budget deficit. This animation shows how that annual shortfall turns into something bigger. A budget deficit is a one-year gap. The national debt is what happens when every single one of those yearly deficits stacks on top of the last, accumulating over decades into the total amount the government owes. Because a sovereign nation doesn't have to call up a bank and ask for a credit line increase, we have to look closely at the exact mechanism they use to borrow all this money to understand why they aren't going bankrupt. Instead of a giant credit card, governments use a specific financial instrument called a bond. This document is a tangible piece of that process. A bond is a legal contract, a formal IOU issued to creditors. The transaction is simple. Investors hand over cash today, and the government guarantees by law to pay it back later, plus regular interest payments. To manage the trillions of dollars changing hands, this operation requires massive institutional infrastructure. In the United States, bonds are issued and tracked right here at the Treasury Department. Because the government issues these bonds itself, it sets the terms of its own borrowing. That puts it in a completely different position from a consumer begging a bank for a loan. So if the government is writing out trillions of dollars in IOUs, who is holding all that paper? A popular rumor claims the debt is entirely controlled by foreign governments. This chart shows the reality. The vast majority of government debt is actually owned by individuals, domestic pension funds, local financial institutions, and central banks. This creates an interesting cycle. When average citizens receive their steady retirement or pension checks, a large portion of that money is literally the interest the government is paying out on the national debt. That explains who gets the interest payments. But what exactly is the government buying today with the borrowed principal? A major part of government borrowing goes toward funding massive multi-generational infrastructure projects. Building suspension bridges, dams, and transit systems requires upfront capital that is nearly impossible to cover with a single year's tax revenue. And when workers are out pouring concrete for a new highway, it acts as an economic stimulus. The government is building the physical trade routes and logistics networks that allow private businesses to transport goods and thrive. Think of government debt as an economic time machine. It pulls future wealth into the present, investing it in physical infrastructure to build a stronger, more productive economy for tomorrow. But just because this system is built on bonds rather than credit cards does not mean the government has a magic money tree without consequences. Seeing a headline that the debt has crossed $30 trillion sounds terrifying. However, looking at the raw top-line number alone tells us very little about a country's actual financial health. Economists use the debt-to-GDP ratio, comparing total debt against total economic output. If output grows alongside debt, borrowing is sustainable. But when debt rapidly outpaces growth, governments face spiking borrowing costs and severe fiscal pressure. When you max out your personal credit card, you are usually consuming things today that lose their value tomorrow. Healthy government debt is used to build things like a high-speed bullet train or a modern power grid that will generate value for decades. Once you see how it's secured, who it is owed to, and what it physically builds, the national debt stops looking like a ticking time bomb. It's an ongoing engine of global finance.
Share, like, comment, and subscribe.